Morning all, how are we all doing? Morning Ian, Novelty, novel name. Morning Peter, Amy, Kennelly, Virginia, Kadabra, Gregors, Danny, Yoko, how are we doing? Andres, morning. So it's Wednesday. Weird. We've only had one trading day this week and we're already on Wednesday. Morning Momo. So far today we've had an Aussie New Zealand ADR hit. That's all. That's the gap fill done now on Aussie New Zealand from yesterday. So they didn't manage to get the gap fill yesterday. They've done that this morning, so that's all done. So that's basically a nice ADR reversal. You've just had a 5-minute reversal alert on that one. Oh, no, you haven't. Weird price action there. Just about to get a reversal alert on that one in a minute. So that's a good potential 125 ADR. So good potential for a pullback on that one this morning. So that's the only movement overnight, really. We've had a little bit of movement on the yens, which has just started this morning. I presume this is probably to do with what's going on with the earthquake at the moment. A little bit of weakness showing in the yen, so a little bit of upward movement on the yen in the last hour, but nothing much else overnight. Very dead session in Asia. So nothing exciting. There was no Asian news. It's still a bank holiday in Japan today. So the first news event of the week kicks off today with the PMIs this afternoon at 3 o'clock. So we should get some movement, hopefully, off of the US dollar later. However, it is FOMC day. It is only meeting minutes, no interest rate release. So not sure really if that is going to have any impact this evening. As I said yesterday, we haven't had any new data that is any different from the last FOMC meeting. So there's nothing really changed. So I suspect we'll just get continued weakness in the US dollar. Whether or not it pulls back for a bit before it does that, we don't know. Stock indices certainly showed signs of dropping yesterday, which would indicate US dollar strength. But we will see. So that's news this afternoon. 1:30, we've got Barkin speaking as well. May or may not say something there, but 3 o'clock's the first news of the day. So that's what we got to look forward to this evening, this afternoon rather. Overnight, nothing news-wise or newsworthy overnight. So yeah, basically just seeing what happens. One thing we need to be aware of with world events, obviously, is the attack taking out that Hamas leader. So obviously, we've now got another party potentially getting involved in the Middle Eastern conflict. If that escalates, what tends to happen is people will then pull money out of the stock market and drive it into the safe havens, Swiss franc, yen, places like that, and potentially US dollar as well. So if there is any retaliation to that Hamas leader being killed, there's a potential we might get a big dip in the stock markets as people pull money out of stocks. So you want to put your money in places that are safe. Stock market is not safe during times of conflict and times of uncertainty. So just be aware of that. If there is any retaliation for that, we may well get a sharp dip in the indices. So that could happen obviously at any time. Same as when we had the Russian conflict kicking off. Every time Putin opened his mouth, the stock market crashed. And then they would rally back up again. He would say something else, it would crash again. So any kind of escalation in conflict is dangerous. So we buy the Swiss franc, we buy the yen. So that's basically what's happening today. We've got 4 minutes to the open. Just a quick recap of yesterday. The really nice, easy day yesterday. Lovely day. NASDAQ, straight in, straight out yesterday. So the opening range pre-market, we just collapsed straight down to TP1, straight down to TP2 within 15 minutes. Job done. NASDAQ was really nice and clean. The Dow yesterday, very much the same thing. To the opposite. So there's your pre-market range. That was a pre-market range actually down there. We broke straight away, straight up to target. Took both of those off up the top there. And then the S&P didn't find an exit on the S&P, so that was a hedge loss. So overall, 2 nice wins and 1 hedge. So that was the US indices yesterday. If you look at the US yesterday, obviously big down day yesterday on the NASDAQ, big down day on the S&P. The Dow kind of recovered itself. So Dow didn't go anywhere. But overall, indices are starting to roll over, as you can see. People, we've had that massive bull run on the indices. So time for a rest, basically, on those. Just shut that down so it's not eating my CPU. So DAX this morning, we are pushing up at the moment at the open. Very much sideways on the FTSE. So we had a very, very big rotation day yesterday on the DAX. So we had a big rally up, big rally down, and then we kind of pulled back a bit. But overall, it was a down day across both indices. So potentially starting to roll over. But the breakout failed basically on that last week's range. We didn't get the breakout. Obviously, it was a very, very tight range. All they've done is they've cleared the decks in both directions. So we are clear, really, to go any direction we want today. So we'll see what happens in 2 minutes. Morning, everybody else. Morning, Astro, Sarah, Thought Feeder. Morning, Neo, Thimba, Evans. Should also keep an eye on the Red Sea situation with tankers being diverted thousands of miles. Potential inflation risk. Don't know how that would affect the FX markets, but yeah, possibly. Don't know. Morning, you go, sir. We're getting a big rally on the DAX ahead of the open. Strong move to the upside there. What happens in the next minute. So only ADRs to look at today is Aussie New Zealand, as I've said. That's now starting to revert nicely. That's a really nice long opportunity because it's a gap fill as well. So they've basically just completely filled the gap, left a nice big propulsion gap in. So it's unfortunate that it's quite a big, strong move on the lower time frame. So you've just had your reversal alert there. So that gap on the hourly is 108, 105. So it's there, isn't it, really? 105, somewhere around there. So you've only got about 16 pips. That's half an ADR. So you've got half an ADR movement in it available to fill that gap. So doable. Not the greatest in the world. And there's a hell of a spread on that. Look at the size of the spread on it. Aussie pairs, very hard to trade. Right. Market's about to open. 1 second. There we go. Pre-markets are in. Big strong push on the FTSE this morning. Trying to anyway. DAX not going anywhere yet. So long on the FTSE. So upside targets on the FTSE today. Obviously, we're looking at this area here, which is the New York Open. That's not the New York Open. New York Open is down there, isn't it? Yeah. Sorry, that's not the New York Open. That's just where we pulled back to in New York. So that would be your initial area of that propulsion gap there. We did retest that. We know the sellers in that area. That is TP1, which I'm just going to take anyway because it's about to hit it. Oh, just missed it. Taking it. So there you go. TP1 hit on FTSE. Nice, easy, clean break this morning. Break even on the second position. See if we can get a run on it. So this area here, obviously, is where the sellers started that move yesterday. So that was the first big sell order that we had coming in. They came back, retested it, added to the positions, came back, retested it, added to positions. If we get back to that area, we know there are sellers in that zone. So likely we're going to hit resistance there if it gets there. If it gets through that level and we've got buyers on board today, then you'll be looking obviously at yesterday's high, which is the previous week's high as well as being your upside target on that one. TP2 for me is up. I'm just going to move my TP2 down slightly just inside ADR, which is kind of around about those highs there, just below ADR. Just in case we get some resistance at ADR off of these areas. We know that we've sold out of those areas twice. Everything you see here, though, on the chart is that week between Christmas and New Year, there was no one in the banks. So this is just algorithmic price action. Now you've got speculative players involved as well. There's a good chance those resistances won't hold up. So we'll see what happens when we get there, but we will probably find limit orders triggering at those levels, and it's also ADR today. So TP2 up there. DAX broken long. DAX hasn't gone anywhere. We've rolled straight up into that sell area from yesterday, which is this big propulsion move. We had 4 hours solid selling on the DAX yesterday after that initial break to the upside. So we know there's a lot of sellers involved, and they pulled back and then obviously started to add in. So we're retesting this area yesterday that they started that second leg on. We'll see if that is going to be where we're going to drop from today. If we do get an upside break, that's very difficult to pick another upside. It's 175 ADR. It's difficult when you had such a big day put in yesterday. Obviously, ADR is where you would start to find a little bit of weakness coming through. That's not really a propulsion gap. That's just part of a large, strong move. So that was just a big order, basically. But somewhere in there, obviously, potentially is upside resistance, which is ADR today. We've also got the same situation as that there with those highs, which is my TP1 to the upside. So if we do get a break to the upside, TP1 should be fairly safe. TP2, I mean, it could go absolutely anywhere. It's very difficult at the moment to tell where these are going. Obviously, we still have no idea if we're going to continue this bull run or we're going to start to unravel the bull market, because obviously we've had an entire month of nothing but buying, which typically is followed by the opposite to some degree. So it's going to pull back at some degree of that move if it is going to continue to rally, and we're going to continue to be bull for January. But all knows at the moment. Struggling a little bit to get out the highs on the DAX. Might get hedged on that. We'll see. FTSE's holding nicely. Just see what happens at the end of this 5-minute candle. Morning, Ismet. Okay, candle's about to close in 10 seconds. There we go. So there's your 5-minute opening range. 5-minute opening range on the FTSE, very, very big today. You'll struggle to get a trade off the back of that. It's going to, obviously, with that, with a candle that big, excuse me, you're going to find it hard to get a 2R target out of that. So the pre-market really was the only one you wanted to take today. 5-minute DAX opening range today is 30, which is still a bit big. It's 20% of ADR. So that's still quite a big opening range that's gone in there this morning, but obviously much smaller than the FTSE. So you could take the 5-minute ORB, which is there. But certainly no follow through on the DAX. Struggled to get high today, so we'll see where we go. Come back to that in a minute. So with the ADR today, obviously that one is your only opportunity there. RSIs, we had RSI extensions yesterday on the Euro US dollar and the pound US dollar. So Euro US dollar I took yesterday, so that's the H1 RSI extension. 5-minute reverse alert was in there. We didn't go anywhere after the initial alert, so there was no follow through from the buyers when they took control yesterday. We've just sat there sideways. We've just had an hourly reversal alert on that one as well, but as you can see, market's not really able to get anywhere today. FOMC days, even if it's not a rate announcement and it's just meeting minutes, quite often is a very flat day. So we get a lot of movement up and down, but we don't get any direction because the market's worried about what they're going to say in the meeting minutes, especially at the moment as we're on the verge of potential rate drops. So if those interest rates, if they're going to give any clues as to interest rates coming down faster than expected, obviously the market doesn't want to put a load of money in on the day before that is going to happen. So before that news is released. So at the minute, we're kind of struggling to get anywhere. So got that first entry on yesterday. I've set my target up there, which is basically kind of where we got to yesterday, which is 150 ADR roughly. It could go anywhere, but obviously we've got this big accumulation day, which we then gapped down and then broke from. So if we're going to retest that area to see if we can get through it back up into that propulsion gap, if it gets rejected, that's really where I want to be out of it. So, but there is a good chance that that's going to go up to there if that US dollar drops, but we're going to need the indices to rally, which they're not at the moment. So there's a good chance that that could go down further, that euro US dollar, but we'll see. That's only first entry on it. Second entry would be down here at ADR today, which is the previous week's low. We had the pound US dollar extended yesterday as well. Obviously, huge ADR hit yesterday. So if any of you took ADR reversals or H1 reversions on these at the moment, obviously we are still in them. We haven't gone anywhere yet. So, but that's a massive propulsion gap. 3 hour drop there. It's more than that. It's 5 hours drop in total. It dropped basically all day until the New York session. So we bounced perfectly off of support there. So that's the previous week's low. We hit previous week's low. Buyers stepped in, limit orders triggered, came back, retested it, limit orders triggered again. So there's your W pattern reversal down there. We've had a 5-minute reversal on that, on a 15 on it this morning. So yeah, looking good. Pound US dollar for a push back up into there today. Just watching the lows here, which is just under ADR, which is the previous day's low. So there's potential for you to find resistance there if it's going to continue on a down leg. Other than that, it may well just come back and do a V-shaped recovery. So those were the only two extensions that we had yesterday, I think. Euro US dollar is still extended on the 4 hour. So you've got 4 hour RSI extension there. Only just, though, it's just below the sort of 30 level. It's just ticking back up again now, obviously, because we are starting to pull back on that leg. But this is a very nice, it's not a very nice trend because it's all news, not sure, reverse, the news, not sure. So it's all news based, basically, all these moves. So it's a bit of a jerky trend, but it is pulling back to the 72.24 area very nicely. So if this is going to be a trend continuation, obviously that's leg one, 78% retracement, leg two, 50% retracement. Off we go. So this is potentially where we're going to bounce back. That's going to require that to be weak. However, if indices are going to drop and undo that move, we should get some strength in the US. So this could pull back further into a much deeper retracement like it did there. And then go. But we will wait and see what happens. DAX is just put in an inside bar. FTSE new high. So we've got an inside bar on the DAX. So that basically is indecision. So no directional bias there. So you got 10 minutes there where the market's not had any directional bias whatsoever. So look to take a break of either the inside bar or the outside bar. And that should get you moving today if we get some strength, obviously. So, but looking bullish at the moment across the board. Wait and see what happens. Okay, just retesting the inside bar high. So other than that, on Forex, there's nothing to look at. So I'm not going to go through all the FX pairs again because obviously I went through everything yesterday morning. Nothing's really got extended apart from what got extended yesterday and has already started its mean reversion. So there's nothing much else to look at really. US dollar, obviously we had some good ADRs yesterday. US dollar CAD, if AZ's in here, he's long on the US dollar CAD. So very nice move there yesterday on that one. We didn't stop. looked like we were starting to pull back. So we've got two very big propulsion gaps there to trade back into. At the moment, though, it looks like it's just accumulating. So it'd be interesting to see if we can get US dollar strength at the same time as Canadian strength. But I mean, at the minute, this thing's just kind of, it's not even flagging, it's just going sideways. If this breaks to the upside today, I think there's a good chance we could put another ADR in and retest that area, especially with the FOMC meeting minutes and the PMIs this afternoon. So if we get positive PMIs this afternoon, we'll find ourselves up there. But we'll see what happens with that one. But there's nothing else to look at with RSIs. And obviously the ADRs are all flat as well. There's nothing really getting close to ADR either at the moment. So there we go. If anybody's got any other pairs they want to look at, let me know. Probably not in a lot at the moment because obviously it's the start of the year. Jazz, morning. Aussie 200 was break even today. Is it? I've never traded the Aussie. I'm asleep. I don't even know what volatility the Aussie gets. I got them. I haven't got the Aussie. Okay, DAX retesting that inside bar high. So just watching for a break. Ratib, morning. Gold? No, haven't got gold, I'm afraid. Don't trade gold. My New Year's resolution, if you weren't here yesterday morning, we're not looking at gold anymore. We're not looking at oil anymore, as Astro's just said. Oil, do whatever Canadian dollar does. Gold, do the opposite to what the US dollar does. That's all you need to know. I'm sure there's some commodities trading channels out there that will give you all sorts of information about oil. But at the end of the day, they've got no idea what's going on because it's got a life of its own. So I'm not interested. There was some news on OPEC yesterday. I think it's barrel production figures being increased. Output rose 48,000 barrels a day last month. So supply is increasing, which would, I don't know what's happening with it. I'm not going to look at it. Oil keeps tempting. Yeah, I'm not getting involved. That's why I'm not looking at it. If you look at something, any chart, you pick any chart, right? Doesn't matter what chart you look at. If you find a chart and you look at a chart, your brain will find an opportunity in that chart. Yeah, so you look at that and go, oh, that looks good. They've just rejected that propulsion gap. If that double tops there, I'm going to go short. Yeah. If I look at oil, I will find a trade. There will be a support and resistance area that is clear as day, and you'll look at it and go, look at that. We get to ADR today, that's the best short in the world. And you'll take it. Just as oil's starting to rally, for example. So there's always a trade. Every chart you look at, and this is why people get stuck and system hop so much, is because it doesn't matter what chart you look at, there will be an indicator, a strategy, or something that will give you an opportunity to trade it, because it's either going to go up or down, and every chart you look at, you are going to find an opportunity in it. So I don't make money on oil. I don't make money on gold. If I look at the charts, I will be tempted to take them. So I'm not going to look at them. Then I can't be tempted to take them, can I? Literally, it's not in any market watch. It's not going in any market watch. It's FX. This strategy is FX. It trades FX. I'm trading FX. That's it. I ain't looking at it. You won't tempt me. And this is an index strategy. There is nothing but indexes. And this is an index strategy for Europe. There's not even a US index on here. I don't care. Not interested. Just say no. Exactly. It's like a drug. You've got to say no. Don't do it. If it doesn't make you money, don't do it. We're rejecting the highs. Sellers stepping in at the moment. So we've just put in an inside bar on the inside bar. So that is a 2IB setup. So you've got an inside bar, followed by an inside bar, followed by an inside bar. So if you look at that formation there on a lower time frame, I mean, we're obviously on M5, but if you look at that on a lower time frame, you're forming a symmetrical triangle, which is a contraction pattern. So you take a breakout of the contraction. And obviously, there's 3 different ways to trade a 2IB setup. You can either trade break of the inside bar, first inside bar, or take a break of the initial range. Obviously, each of them is more dangerous than the next. So as you can see there, if you've taken that inside bar break short, that was wrong. Safer to take, I think, the 2IB, the first inside bar, or take an actual break of the initial range. Basically, the market is opened, bullish, and isn't sure. Wait, it thought it was bullish, so wait for it to break that candle. Let it confirm for you, yes, we are bullish, or no, actually, we're not, we're bearish. Much better. Pennants, yeah, you call it a pennant. Although a pennant is a chart pattern in respect of a visual thing. So you could have a pennant that has got a big candle and then a wick up there and then a bearish candle and then something goes down there like that, and then you get one in there, you get one that pokes out the top and does that, and you'll draw that as a pennant. But technically, the wicks on a 2IB setup have to be inside the previous wicks. Yeah, it's basically a high and a low, a lower high and a higher low, a lower high and a higher low. Contraction. Basically, the market is contracting because there's no directional bias. Someone at some point is going to press the button and place a large order, and it's going to break. As soon as that break happens, limit orders will trigger on the breakout and it will go. With a pennant, you can have lots of false moves in it because you're just drawing it, aren't you? A pennant is something you draw, like a flag. Yeah. Flags aren't clean. That's a flag. Yeah, I'll show you a flag on. Let's find a flag. Not on there, I won't. This market hasn't moved anywhere. You're not going to find any flags, are you, at the moment? There you go. I mean, that's a flag there. There's the flagpole. There's the flag. Yeah. There's the flag break. But you look at the flag. Yeah. I'm not drawing it absolutely perfectly from the top of that wick to the top of that wick, from the bottom of that wick to the bottom of that wick. Yeah. I'm not drawing it perfect. It's a pullback. It's a nice, orderly pullback after a rally, which means that that is typically profit taking on the initial move. And then the second leg will kick in at a level somewhere. Break. That's the second leg. Same with pennants. Everything you draw on your chart is totally down to you to draw it. If you give 10 people the same chart, they'll all draw it differently. Unless the people are literally using an exact, my flags have to be exactly from wick to wick. So from that wick down to that wick there. And then if you're going to do that, do you know what I mean? It's so difficult to do it. You're never going to be able to draw a flag accurately. Look, it just doesn't work. That is a flag. It's just not, you can't draw it accurately. Everything is hit and miss in trading. Still stuck on the DAX. Still stuck on the FTSE. Look, 15 minutes sideways. Tricky today. Go either way. Contemplating calling it. Might make my decision for me, actually. I'll give this. I'm going to give it this candle. It's already done it. Oh well. We'll see if this doesn't go anywhere, and we end up with another doji or spinning top. I think I'm going to close the DAX because it's not able to break. Looking at the price action, it's more likely the bears are going to take control of this morning, isn't it? And also the FTSE has completely stalled out, and we're stalling out in this propulsion gap, look, where we started selling from before. I'm closing the FTSE. Yeah, we've got a big, strong sell zone here. Yeah, that propulsion gap is being sold into again. Okay, I'll leave the DAX on. If this pulls back up here, I'll close that at a break even and just take that 360 this morning. If this does hedge, this is 5R. Yeah, so that's 5R today, which is just inside ADR, just inside yesterday's low, and at this area where we started buying from. Yeah, so highly likely, if this gets hedged today, we will get a move down. It's either going to stall out and go into rotation because it's FOMC, or we're going to get a decent move, in which case then we're going to find buyers down here. So this is a good 5R target down here to find buyers to get an aggressive exit on. So it's not actually a bad looking hedge because we've got a really good, nice support level. We know we've got buyers at down here. And we'll see if we can get an exit down there if it hedges, obviously. But FTSE looks like it's going to roll over. And if that rolls over, the DAX will probably go with it. Bankers still trying to get sober from New Year's Eve party? Probably. Quite possibly. Or they're still drunk. Now, they'll be wanting to make some money. As you can see from yesterday, they certainly woke up yesterday, didn't they? New year, a lot of depending on what desk you're on, obviously, but I mean, you'll be flat, as I was before Christmas. Yeah, if you can get flat, get flat. If you can't get flat, you got to manage your positions. So if you're flat, you want to get some risk on. So this is why you tend to, and that's what I said yesterday about the ADRs. The ADRs are contracted at the moment because we've had a week of contracted trading. We haven't moved very far. So obviously all the ADR numbers are coming down. So you're going to get a lot of ADR hits as price returns back to normal, which isn't a bad thing because obviously each of them is an opportunity. But the extensions you're going to get, as we saw yesterday, will be sort of, 150s, 175s because 175% of ADR of the last 10 days is actually probably normal price action, isn't it? It's just where the lines are closer together because the prices have been closer together. Dax, make your mind up. Peter, question. My first question of the year. Will you start the tutorial sessions on MT4 platform? No. I haven't done anything. I haven't managed to plan anything. So there's not really any, there's so much content on MT4 out there. There are loads of them, but I mean, I can do some, but I'm concentrated at the moment on my hedging strategy and getting that finished so that I can get it launched. I want to get that launched this week if I can. So I have got a Word document going with lots and lots of content idea, but it's just a line. I need to flesh it out with PowerPoint presentations and all sorts of other stuff. So, it's like putting the bootcamp together, basically, again. It will take me somewhere in the region of 2 to 3 months to get all that content together. It's a lot of work, a hell of a lot of work. Yeah. Doing one half-an-hour session will take 3 to 5 hours to prep it, just to find graphics, create graphics, all that sort of stuff. So it's a lot of work. The bootcamp is only 12 hours long. It took me 3 weeks to put the bootcamp together for 12 hours worth of content. Imagine me trying to do which was what I'm planning to do, a different session every day, 30 sessions. Yeah, potentially 30 hours. There's a lot of prep in there. So I want to do that. I just haven't got the time to put it together at the moment, which is the problem. It would be good to have a little list of what people want as well. That's a good idea. I might put a poll actually out in the Telegram group. Okay, hedged on the DAX. Very annoying. It's a guaranteed profit morning. So 360 banked, 260 hedged. So I'm going to be walking away with $100, whatever. But can't really get anywhere today, can we? So plan, upside's not very nice, is it? So plan for the DAX, as I said, with the downside today, we've got this area here, which we are continuously buying from at the moment. We have been for the last week, but that's an algorithmic level, as I said. So that's just within ADR, just above yesterday's low. So if we do get down to there, I'll exit the shorts down there and wait for a pullback. We should get some limit orders triggering somewhere around here. We've also got the weekly low down there as well. So within that half an ADR or quarter of an ADR of space from where I'm getting out down to that low, there's a lot of potential limit order levels. So I will be getting out down there and getting an aggressive exit if it gets there. If it doesn't get there, that's just going to lock in at a hedge loss, unfortunately, but still a profitable day. Upside target, I'm just going to move targets down just within ADR. Actually, or should I leave them where they are? Might move them. I'm just going to move them down within ADR. Although ADR is obviously not necessarily at the moment an accurate measurement, because obviously we've had this period of we haven't gone anywhere over Christmas, but we got this high, which is this previous low that we hit, which we reacted at. So we know the sell orders there. We know the sell orders there. We know that when we got back to this level, we rejected it, but I mean, that's not really the same level. But that was where we put a big order in yesterday as well, coming through that level. So there's a propulsion gap, there's ADR, and there's a previous high. So somewhere around there, I would expect to find some selling. So I'll get out there and look for an aggressive exit. If we just go into rotation, it's going to lock in the loss. Nothing you can do with it, as I say. We will see. But it could go, but certainly doesn't look like it today, does it? So that's a nice move on the FTSE. You heard me say, I'm going to close it out. Just as I said, I think I'm going to close this out. We pushed down and I lost the exit. If I'd have made that decision 2 seconds earlier, I'd have been out of that with flat, which would have been a nice $400 day. But anyway, it's not over yet. We might move somewhere. We'll see. We've got no news catalysts during the Asian session at all. So we've just got to basically wait for this afternoon. See what happens. All the other positions I'm in at the moment are just sitting there. Nothing's going anywhere far enough on the yen. Pound yen's moving nicely. These bloody swaps kill you. So we got yesterday's high, well, either the previous day's high and yesterday's high coming up on the pound yen, which is that previous support. If we can break that level, I think we're going to get a good run up into retest that area. So I'm just targeting that propulsion gap at the moment, which is 125 ADR today on that pound yen. The other yens, CAD. Got a target on that one. Very similar on this one. Profit, is it? I'm going to go for the bigger propulsion gap, which is just above 125 ADR. So we've got this propulsion gap target there. So if we break these highs that we've struggled at, which is where we bounced here and then broke through, if we break that area today, we've got a good run, and there's nothing really to stop us until we get back up into this area here. So somewhere in the middle there, I'll target on the CAD, the odd. I'm looking up at propulsion at that. That's a bit optimistic, 150 ADR, but there's this propulsion gap here at 125 ADR. To be honest, if we can get a move on the yen that gets to that level, it's probably worth taking. It's not a lot of profit at all. But then again, I don't really want to get too greedy against this yen because we are expecting it to power up at some point this year. So potentially in the next sort of couple of months. So I don't really want to be too far offside on the yen when that does go. Euro US dollar as well. First entry was on that yesterday. We're just not going anywhere. So propulsion, well, it's not really even a propulsion gap, it's a gap. Up there is where I'm targeting at the moment. No reason other than it's a fairly decent amount of profit and it's roughly 125 ADR. I'm going to rely on some US dollar negative news to get me there. If we get positive news, we're coming down, in which case I'm going to need to take second position down at that weekly when we get a reversal of that. So there you go. That's all we got today. Everyone in the chat room, please press the like button to help me and the channel. Thank you, Astro, for the advert. Novelty, can you show us a manual example of the new hedging strategy? Not really a manual. I can show you a... Oh, that's in optimization mode. Stop. I can show you a visual example. Very, very simple. So basically, all hedging is the alternative to using a stop loss. So you basically go long or short, dependent on whatever. Flip a coin if you want to. It really has no impact whatsoever. I'm using the equivalent of a market reversal alert using a moving average just because I'm lazy and it's easy. So I'm using a 9MA. Basically, so if we close above the 9MA, we've got strength. So I go long. If you don't, if it works out, brilliant. If it doesn't work out, we'll hedge it at some point. There's no right or wrong with any of this stuff. Basically, with a hedging strategy, what you're doing is you are basically locking in a loss and waiting for a reason to take an exit on one of those positions that works. So you're basically saying, when you've decided which way you're going, yeah, excellent, I'll get out. And then I'll hope that you will come down so I can get out of my other position. That's the ideal scenario. But all you're looking to do with a hedge is whatever you lock in as a loss, you're looking to make more than that back because that's a profit. Yeah. So if you locked in a $500 lot hedge, so give me one sec. Just something over here. So yeah, if you lock in a $500 hedge, all you've got to do is it's like the stock index hedge EA. if you make $500 on that move there, yeah, and it pulls back by what, and this loss basically here becomes less than whatever you make on the long, the $500. So let's say that this loss is there 1,000 and it pulls all the way back and it becomes 350 there. You can close that hedge out at 350 there and make $150. Yeah. But if price pulls back, doesn't get to that level and then pushes back up again, you re-hedge. So you lock in another loss. Yeah. So what happens with hedging is your losses get incrementally bigger and bigger and bigger. So the way that this strategy works that I'm building is it gets into a trade there, okay, and we wait for price to confirm that we are moving. So what we've got here is a long position there. We've got a hedge locked in. In this case, I think it's half an ADR. I can't remember. I should have looked at the input, shouldn't I? I can tell you what it is. 51. ADR is 64. So that's probably 3/4. Oh, no, sorry. ADR is 86. So that's roughly 3/4 of an ADR. So I'm basically saying if price moves up and I get a long on, put a pending order 3/4 of an ADR below it. So I'm giving the price time to muck about and do whatever it wants to do while it's deciding whether it wants to go long or short. If it decides, no, I don't want to go long, I want to go short, I will lock in a hedge at 3/4 of an ADR. Yeah. If price pushes up above half an ADR in my direction, I will then break even that trade and hope that we get a move started. Yeah. And I would drag a trailing stop until it exits, basically. So if we let this one play out, it will either do that or it will hedge. In this case, it's hedged. Yeah. So now basically what I'm doing is I'm saying I'm hedged. Make your mind up. Which way do you want to go? Are you going to go that way or are you going to go that way? So we're waiting for price to get beyond a certain point beyond our position before we actually go, right, you're going long or short. We're not just going to put a trailing stop in or set a target. There's no point in setting targets with any strategy when you're doing this sort of thing, because if this thing is going to trend for 4 days, stay in it. There's no reason to get out, is there? Don't set a TP at 2 to 1 when the thing's going to move 7. Yeah, you get out when you see the market starting to move back the other way. So let this play out. So you can see as soon as it gets to that level, yeah, we're starting to move in that direction. We lock in that sell and we start to make a profit. Yeah, and as soon as price pushes back against us, we exit that one. So we've made a profit on the short. We close out a portion of the long. And again, there's no right or wrong. 10%, 20%, 50%, 100%, whatever you want to do. You close out some of it to reduce the drawdown. In this case, I've closed out 20% of that position, basically. Ideally, what you want to do is whatever you made on that short, you want to close out less. Yeah. And again, this is all stuff that I'm working on. Again, there's no right or wrong. I've tested loads of variations of this. It's different every single time. It really is different every single time as to what you should do, because it depends on how far this thing has gone and how much that is in drawdown. Also, it's going to depend on how many other hedges you've got running at the same time and what your portfolio is looking like. So there's no right or wrong answer again. But this is why I want to play it out in forward testing. So now what we're going to do is we need to get out of this long. So we've got to hedge the short direction. So we put on exactly the same amount as we put on initially. Again, if this continues to go short, we take a nice big order and we go short. The idea being is we want to make as much money as we can because we've got to close some more of that out. Yeah. So if price pushes up in our direction, we don't leave our hedge there. We move our hedge up with price. So you'll see as price pushes up here, that hedge that lower hedge line will move up. Yeah, see it moving up? So what we're doing is that we're saying if we're going to hedge again, we're going to make our hedge as small as we possibly can. So we're taking less and less and less and less risk as price moves our way. Now, in this case here, what price did was it got us back to where we were. So we close out that long. We've made the profit on the short. So in total, we made a short trade win and a break even on the long. Job done. It took us a week. We didn't lose any money. We made money, but we didn't get stopped out. We didn't get any losses. We didn't have any problems with psychology because we were annoyed because this didn't work the way we wanted to, etc., etc. So that's the beauty of hedging. It's a much more relaxed trading style. But there we go. So we'll start again. So we've gone long again. Yeah, you see this line lower is being dragged up and up and up and up and up and up and up. What we're doing is we're basically minimizing. If we are going to get hedged and we're not going to be able to make profit on our trade, we're minimizing that hedge. We're making sure that our risk is as small as possible if price goes in our direction, which it didn't again. So now our hedge is tiny. It's only $140. The original hedge was 300 and something, wasn't it? Yeah. So we've got a tinier risk here. So now what we've got a situation of is, okay, this trade didn't work today. We've got a tiny little hedged loss there. Let's have a look at what else we've done today. So we've traded the US dollar yen today. We've traded the pound CAD. They've both made us $400. So we go, screw it. Let's just shut it. We'll come back tomorrow. Yeah. So we're trying to, every time we do get hedged, we don't get a move that works for us. We're trying to reduce that risk down. And then we can look at our portfolio every day and go, I'll just shut that. I'll shut that because that one made 800. That one made $1,000. That one made 300. These three made a total loss of 700. So add all the winners together, add all the hedges together, shut the whole lot in a day, try and go flat every day. That's the plan. So it's a strategy that has got to be treated in the same way as position trading, in the fact that we're looking at our portfolio. If at 5 p.m. you have 0.5% there, stick it down there. Job done for today. Tomorrow, the next time we get a move started and we cross above a moving average or a reversal alert happens in effect, we start again. But the key to this is to trade uncorrelated pairs. So I've got a pairs list together, which basically I'm going to be trading with it, which is Aussie CAD, Aussie Swiss, CAD Yen, Euro US, Euro Yen, Pound Swiss, Pound New Zealand, and New Zealand US. So what that does, those 8 pairs there, it gives me no more than 2 correlations. Yeah, so I'm limiting exposure. So I've got the Aussie CAD, I've got the Aussie Swiss. 2 Aussies. There's no more Aussies in there. Then I've got the CAD Yen, and I've got the where's my other CAD? Oh yeah, Aussie CAD. So there's my 2 CADs gone. Yeah, Euro US dollar and Euro Yen, and then Euro Yen. So there's my 2 Yens. There's my 2 Euros. Then I've got the Pound Swiss and the Pound New Zealand. So there's my 2 pound pairs, and then I've got the New Zealand dollar, US dollar. There's New Zealand covered and US covered, and there's Swiss covered. Yeah. So with those 8 pairs, I have no more than 2 exposures. So if the US dollar takes off in one direction, I'm either going to get one of 2 things happen. 2 instruments are going to hedge, or 2 instruments are going to fly and make a massive profit. Yeah. What I don't want is any more than 2 currency exposures moving strongly in one direction. What I also don't want is everything happening at the same time. So I've got exposure in Asia there. I've got exposure in Europe there. And I've got exposure in the US session there. That's Europe. Yeah. So I've got exposure happening everywhere. So if, for example, I come in to the London session and we've had a massive move on the Australian dollar to the upside, and basically the Aussie has flown and made $1,000 profit, that's it. I'm done. Because if I've been flat the day before and I come in the morning and I've done 1.5% on my account or 2% on my account, why trade? Yeah. The whole purpose of the job is to make money, not to trade because you are a trader. It's to make money every day. If I come in the morning and I've made money, brilliant. So if we have a crappy Asian session, We've come in and we've got double hedged on the Asian session. We wait for the UK session to open. If the UK session moves the pound massively and the euro massively, and they both make lovely profits, which are more than we got hedged on the Asian session, we shut the Asian session hedges out, take the profits on those, and we take the net for the day. The danger is you get a really rangy day across 3 sessions and you get hedged on everything, in which case then you are now stuck in hedges. You've got to deal with all of those hedges. And again, that's something manual. That's what I can't test, and I need to work out in forward testing. Yeah, so that's the strategy, which is, you know, it's a standard hedging. It's nothing complex, nothing clever, nothing new. It's not any. I haven't invented this. This is hedging. That's what hedging is. The job is to reduce risk, but trying to do it manually is incredibly complex, which is why I've built this EA. And this EA is not the be-all and end-all thing. I'm just going to try a different period so we can see what it does on a different period. All this is to do is to make my life easy in managing my hedges and managing positions and managing stops, locking in profits when things move, that sort of stuff. I will be manually eyeballing this on a constant basis. This is just a partial automation tool. It's not something that you can just put on a chart and go, yeah, leave that going. It's going to make me loads of money. I could probably develop it into something like that. But again, as you know, trading's discretionary. You can't have something that's going to work in all market conditions. If there's an FOMC move coming up and I've made £600 in the Asian session, I'm not trading the rest of the day because FOMC is probably going to make the market rangy. What's the point in locking in 3 or 4 hedges? Because you know the market's going to be rangy. You stop. Yeah, so you've got to be able to use it discretionary as well. So gone long there. I wanted to find a point where it doesn't hedge, just to show you what happens. There we go. Yeah. Okay. Right. So that's a perfect trade. Look. Done. We're out. Yeah. So that was a $500 trade. We went long. Yeah. We didn't get hedged on it. And it just went, we trailed, we locked in, we trailed, we got out with $500 odd. Job done. That's what we want to happen every session. Ideally, we get into Asia, we wake up in the UK, Asian session, we've had a breakout, the Aussie dollar has rallied, we didn't get hedged on it, we've got 2 Aussie longs, which have banked us 1,000, thanks very much. Welcome to the live stream, we're done, bye. That's ideally what you want. That's a scenario, isn't it? That's what, obviously, you can't test when you're looking at anything in a backtester. So this one's gone short. It's squeezing that hedge down to reduce the risk on it. Haven't triggered the exit yet because the market's not going anywhere. Look, this is why we've got this line here. Yeah. If we're not moving anywhere, this is all based on ADR. As you know, everything I do is based on ADR. This is half an ADR, quarter of an ADR, whatever you want it to be. It's all adjustable. Well, I've tested it all works. It's just a case of preference, really. But it hasn't gone anywhere since we got into the position. So we're not doing anything. Yeah, we're not putting a trailing stop on. We're not taking a profit. We're not literally doing anything because it's only moved a quarter of an ADR or so. What we are doing, though, is we're pulling that hedge down closer and closer and closer towards price, because what we're doing is we want to constantly reduce the risk of the amount risked when we hedge ourselves. If it's going to play out, we don't care. If it isn't going to play out, we want to play out with as small an amount of money as possible. Yeah. So this is why we have a trigger level where we actually go, right, this trade's working. Now we'll do something about it. And what we're doing is we're locking in profit, and this hedge will never get triggered. It will move the order down, but it's never going to trigger that because it will get stopped out on that before it hits that level. And as soon as that stops out, that pending order there gets cancelled off. Yeah. So again, another perfect trade, $370 in profit, running, keep running. Don't stop. Don't get out. Why get out? Look at it. It's trailing the 9. Yeah. 13, 14, 16, 18, 19, $2,000. $1,800 out. Yeah. Cancel off that. Wait. What's your next move market? Yeah, that's the perfect scenario. This is all fully managed. So this is what I don't want to do. I don't want to have to manage this lot. This is what this EA is built for, is to manage everything that's working, basically, so I don't have to worry about it. I don't have to touch it. I don't have to manage my hedges. I don't have to do anything apart from monitor the thing that is important, which is this, the P&L. How's everything going? If it's going well, run it. You just carry on and you bank it when you're ready. If it's not going well, I will need to deal with it. And obviously I will need to do drawdown control. So when something like that happens and you've banked $1,800, you will look at your P&L and go, okay, well, I've got a $300 hedge there. I've got a $200 hedge there, and I've got something else sitting in plus 150. I've banked 1,800. What do you want to do? I don't know, just close the lot out and walk away. Or I'll go, well, I've got those two on. That one seems to be running. Now, if that one can pay for those two, that one's 100% profit. Those are the decisions you make as a trader. This thing can't make those decisions because it can't see your entire portfolio. It doesn't know what your week, your month, the day's been like, does it? So, but that's basically it. Very, very simple. Very, 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 very simple. It just is managing the market, managing positions. But you'll see it play out when I get it live, which I'm hoping to do today. I've got more back testing to do this morning. I didn't manage to get all my back testing finished yesterday, which is why I've got this account set up ready to go. But I haven't put the EA on it because I didn't quite get my back testing. I haven't decided whether I want to use a quarter, a half, or 3/4 of an ADR for the hedges. And I've back tested and watched all of them. And there's advantages and disadvantages to all of them. And I can't really make my mind up. So I think I'm just going to chuck it on there and go half an ADR and basically hedge when you get to those levels. And I'll see what happens. But some people will be more aggressive. Other people will be more relaxed. So if you're an aggressive trader and you want to trade, I'm trading it all on hourly charts. You could do all of this on 5-minute, 15-minute, 4-hour daily. You know, it's, again, there's 1,000 ways to do it. At the end of the day, you're flipping a coin, pressing a button and hoping that the market goes your way. If it doesn't, you're dealing with it and using that market that's moving elsewhere to pay for the stuff that's not working. It's exactly the same as position trading. It's just not scaling into losers. It's locking in losses. So it's very, very similar in this respect, that we don't take losses for any reason apart from the market going against us. We're just locking it in, not taking it off of our P&L, which is the difference between most strategies, isn't it? There you go. Hopefully that answered the question. Are you still running market reverse alerts EA? Yep, you're looking at it now. This is all MRA. I can't not run it. It's my job. US dollar yen. So US dollar yen rallying at the moment. I'm not in the US dollar yen. I'm out of that one. I got out of that one yesterday. Still going. So watch this high. So we've got this low here, which we came up, retested again. So that's just about 3/4 of an ADR. So you're only about a quarter of an ADR away from hitting that resistance. Other than that, if it breaks through that level, we're off. Obviously, with this one at the moment, I suspect all of this is being caused by the earthquakes. So we've got more earthquakes happened this morning. They're estimating anything up to 5 days of aftershocks, and some of those aftershocks obviously could just be big as well. So somebody asked a question this morning in Telegram, what do I think is going to happen with the earthquakes? How are they going to affect the market? So I can't remember when it was, but New Zealand had earthquakes in Wellington, I think it was, a few years ago. And the initial reaction was the New Zealand dollar dropped because of the earthquakes happening. So when earthquakes happen, you get power outages. Power outages affect the economy because obviously businesses can't trade, people can't get around, it all goes wrong. So if those are all dealt with quickly and there's not huge losses of life and huge infrastructure damage done, all you'll get is a blip. If there's an earthquake which ripped New Zealand in half and half of it floated off, obviously that's going to have an impact on the New Zealand dollar. With the Japanese at the moment, it's a small area at the top that's been affected by an earthquake. That's it. That's all we've got. Tokyo's fine. The the hub of the economy, is fine. So no problems. So you'll have a little bit of a, oh, hang on, what's going on in Japan? Pull some money out of the yen, let's be safe. Was it Christchurch? Was it? Yeah, New Zealand earthquake. But it's not likely to be a sustained drop in the yen because of that. So what we're seeing at the moment is probably a reaction to that. But long term, they're going to be increasing their interest rates. So yen powering up long term. But until they give us some indication, and they never do, the Japanese, they're terrible with communication. Unless they're not happy with the Forex prices, in which case they tell us every day. But what they're actually going to do, they keep usually quite stubborn. So at the moment, it's rallying. You've also got the US dollar on a bit of a run at the moment as well. If we get any problems with the Middle East escalating, probably the yen will rally. So that will come back down again. So I've got quite a lot of exposure on the yen at the minute. So I'm kind of hoping I can get one of these to sort of like 0.2% or something and just stick 0.25% down there off of this yen. I did bank a yen yesterday, I think. Oh, US, yeah, of course. I did bank a yen yesterday, I think. Staring at the chart, I banked the yen on yesterday, the US dollar yen. So yeah, I mean, I'm just looking to reduce a little bit of this down. But yeah, at the moment, weak. Thought feed, I'm new to position trading. Can you please give in a nutshell description of what basket trading means? Have you watched the Bootcamp, Thought Feeder? This explains everything. Basket trading is just another word for position trading. Yeah. So it's a basket of trades. So at the moment, I've got a basket of 1 on each of those. If I had 2 trades on, I'd have a basket of 2. Yeah. So it's a basket of orders. So you go long, price moves down, you go long again. You've created a basket with 2 orders in it. It's a position. Same thing. There's a lot, you know, you could call everything whatever you like. I call these trades. This is a trade. This is a trade. If I have 3 entries on the Aussie dollar yen, I have 3 trades in my position or basket. My position is long. I have a basket of 3 trades or a position encompassing 3 trades. That's all it is. It's a basket. So that's literally it. It's a basket of trades. Have I backtested the indices on the new Hedge EA? No. The problem with the indices is 1, market closes, 2, gaps. I think personally indices should be an intraday thing. So you could do the you could approach the indices on the 5-minute time frame. And make sure you close everything out at the end of the night. But if you've got multiple, I mean, the whole purpose for me of hedging is not taking losses. Yeah. This is what trading is all about. This is the bit that everybody misses. Everybody's looking for the system or the strategy that makes the money. They're not looking at what the big picture is. The big picture is your job is to make money. How do you make money? Not losing money. So what should your strategy 100% focus on? Not losing money. What loses money? Stop losses. What do you need to remove to stop losing money? Stop losses. Yeah. Hedges remove stop losses. Position trading removes stop losses. Gaps and markets closing and opening and huge swaps overnight and things cause losses. So I don't think you should really be focusing on indices with it. Why do you need to focus on indices? You've got 28 Forex pairs at your disposal. Is that not enough? If you wanted to trade all 28 FX pairs using some kind of hedging or position trading strategy, as I do, you can do. There is over trading. Yeah. You don't stop trying to look for what about. Try and get it working on one thing first, and then look at maybe expanding the portfolio. Don't need to. Stock index hedge works extremely well. Yeah, it's a momentum-based strategy. The hedging strategy is a variation of this on Forex. This doesn't work on Forex because we don't have a momentum open in Forex. But we can implement a similar strategy on Forex by using an entry trigger, which is momentum. So either the reversal alert or a simple moving average crossover, or not moving average crossover, a simple moving average cross, i.e. we close above a moving average. For the market to close above a moving average, it has to have done what? Pushed hard in one direction, because if there's a moving average coming down, we have to put in a big candle to close above it. That's a trigger that the buyers are taking control. Let's see if they are going to stay in control. If they're not, okay, we'll wait and see who gets control. The person that gets control, I will go with them and I will lock the profit in on their move. When their move ends, i.e. I get taken out on a trailing stop, hopefully the other guys will take control and I can then get out of the other position with a loss that is lower than the profit I made on that one. It's simple mathematics. This is what everybody misses. They're trying to go, well, if you use the CCI in conjunction with the stochastics, when the moving average crossover has happened and you had a 3-day trend and not more than 2 up days in the last 10 weeks, you go long on it, there's an 80% chance it will work historically that we'll never see again in the future. Why don't you just concentrate on if the market goes your way, make the money. If it doesn't, deal with it. That's the job, dealing with what goes wrong. What goes right goes right. Focus on what goes wrong and eliminate that, and you will make money. You can't not make money. Very hard to make a loss when you're not putting an order in the market that tells the market to take your money away from your account, because the market will keep going up and down. And at some point, it's going to go up more than where you said it was going to go up from, and you just get out. That's what hedging does as well. All you're doing is you're trying to squeeze that risk down. And then if it doesn't go your way and it locks in a loss, what are you doing? You're locking in a maximum that you can lose, but you're not taking a loss. Yeah. You're waiting for the market to decide which way it goes, and then you're looking for a way out of that. And again, there's multiple ways to exit hedges, which again is incredibly complex to code. So I'm going to manually manage all of that and then look for a way potentially to try and code something in. But very hard. A trailing hedge, never seen that before. What determines the initial entry? Moving average in this particular case. And again, I've tested multiple moving averages. The reason I use the 9MA, the 9 EMA is from when I was trading stocks, the 9 EMA was God. Yeah, if you're going to get something that's going to trend, that one we just looked at, yeah, prime example. We're using the 9, yeah. So prime example of the 9. When you get a trend, the price will bounce off the 9 EMA, the 9 moving average, yeah. So you watch this trend here. Yeah, so that's the 9 EMA. Yeah, so we trigger the short. No, we trigger the long, sorry, first, then we go short. Yeah, but watch that 9 EMA. Look how it supports price, right? Then it doesn't, because the market's reversed. What have you got in there? Reversal alert. What is a reversal alert? A cross below the 9 EMA. The market reversal alert indicator doesn't work on the 9 EMA at all, but they, again, remember I keep saying, there are 100 indicators out there that do the same thing, that tell you the same thing. Someone puts a stochastic, an RSI, and a CCI on their chart, and they go, hey, look, it's overextended on all 3 of them. Of course it is. Price has moved up. It's an oscillator. It measures price moving. Were you expecting one of them to go down? Right? When price drops and you get a break in structure and a market reversal alert, What's it also going to do? It's going to cross below the 1 EMA, the 2 EMA, the 3 EMA, the 4 EMA, the 5 EMA, all the EMAs until it gets to one that it doesn't cross below. And you're going to go, oh, right. So a market reversal alert doesn't cross below the 12 EMA. Random number. But anyway, yes, it will cross below a lot of moving averages on its way down. It will also cross below some parabolic SAR levels. It will also cross below a Bollinger Band and a mean reversion on a Bollinger Band. It will do lots of stuff on everything. But in a trend, when something is trending hard, the 9 periods before it, if it's a strong trend, you will never close below that. Some people use a 5. In stocks, I was taught to use a 9 as the industry kind of standard, if you like, for moving average trend. When we get a move underway and prices moved in our direction, we don't want to get out if it's going to continue to go. You could use a parabolic SAR, you could use a Bollinger Band, you could use all sorts of stuff. But I've decided on the 9 because I'm comfortable with it. I've used it in the past. But you watch the 9 in this trend. Yeah. When the trend actually gets underway. Drop. Now look how far away we get from the 9. So when we get an accumulation, we get a strong move, propulsion gap, accumulation, drop. So they're accumulating and adding to the position. The 9 never gets invalidated. Strong push, accumulation, strong push, 9 EMA bounce. It's not bouncing, it's waiting for the average price to catch up. It's pausing, waiting for the next leg. Next leg is going to be bullish or bearish. We don't know. But if it's going to be bearish, the 9 will stop you getting out too soon. Yeah. So you watch the 9. Yeah. Bounced. Bounced. Yeah. Right. When we cross back above it, buyers are in control. Yeah. And this is the difference between a reversal alert and a moving average cross. That is the last batch of buyers. That candle. Yeah. Before that new low was made. So in the reversal alerts indicator, you will see there is a support rectangle drawn there. What I'm looking for is the last batch of guys that tried to go long that got run over. Can they get their orders on again? If so, once that has happened, they have taken control of the market. Then we're looking for them to retain control of the market. W pattern. Yeah. The moving average there means that there's been a big buy order. What's that? The guys that sold there taking profit on their move. Does that mean they're in control of the market? No, because when they tried to buy it from there, they failed. So this is just them trying to buy it again, back above the 9 moving average. And then you push down again, or you don't. In this case, we cross above it. There is a trigger to go long. And until it closes back down below that, the bulls are in control. In a range where we're not going anywhere, like the Asian session, it's going to go up and down, above and below and above and below and above and below that 9 moving average all the time. It's utterly useless. It's only of any use. All moving averages are only of any use in a trend. In a range, they will just give you false signal after false signal after false signal. Yeah. So basically, you want to be taking trades when the sessions are expected to get underway. So for the pound, don't really want to be trading the Asian session in the pound. But it doesn't matter if you're using ADR, because if it closes below that moving average in the Asian session and I go short, for example, my hedge is half an ADR away. So when the market opens, if London decides to go the same way as Asia, brilliant. If it doesn't, I will hedge the position and wait, because there will be others that won't get hedged and they will get onto these moves. That will make 1800. That will lock in a hedge of 300 and I'll just go, screw it, I'll shut that. Yeah. This is why you need to a portfolio approach to it, which is why in an EA, in a strategy tester, you know, I can test this and it will come out with a negative. That doesn't mean it didn't work. It means that this particular time period, this didn't make a profit, i.e. it didn't trend enough. Doesn't matter because the others will have. Yeah. So this one, look, we're trailing again. Trail, locking in a loss. So there's a $271 loss locked in on that. But what's the profit on that? What are we up? Probably $2,000 or something, is it? I don't know. We'll find out in a minute when it closes. There we go. So we closed that out 855. We used 225 of that with that 855 profit. Yep. So we banked $600. Now, if I've got a hedge now locked in at 877, if this drops down now below that 649, which was the last hedge profit, yeah, when that, you can see the open and close profit there, but when that gets to zero, I can shut this whole thing out and go, oh, well, that didn't work, did it? What have you lost? Nothing. What's the difference between position trading and normal stop loss trading? You don't take losses. What's the difference between this and normal trade? You don't take losses. What you're doing is you're closing profit, increasing your P&L and waiting for the market to give you an exit on what hasn't worked. Massive difference to using a constant stop loss strategy. See that? Out. Yeah. What did we lose on that? Nothing. We made money. This thing went short down here and it was totally wrong on that. It got out. Exactly the same way as the stock index Hedge EA works on the indices. Yeah. Look at the DAX. Was it the DAX yesterday? No, the S&P, wasn't it, yesterday? No, it was the DAX yesterday, wasn't it? Yeah. So we hedged, we went long, we got out up there, we took a second short, we got out there on that short, and that whole thing there was about $160 profit. Didn't take a loss. If you'd have gone short there, put a stop loss there, and then gone long there, you would have been stopped out on that position and you would have made profit on that position. So it's no different to using a stop loss. The difference is when the market does that, you'll go long, stop out, short, stop out, long, stop out, short, stop out, hemorrhaging 7, 10% of your account. Hedging, you cannot take more than one trade. You stop all of that crappy loss that kills everybody. You have a good day, you make a load of money. You have a good day, you make a load of money. You have a bad day, you give all that back and you make a bigger loss. Then you get crossed, double your lot size and blow your account. Hedging stops that happening. Position trading stops that happening. It's all to do with the psychology that you can't fix because you're a human being. But all these strategies fix that point that you can't control, which is your inability not to go tilt, which is what everybody has. It's a human trait. You can't get rid of it. We're just pushing down now on the DAX. So we're approaching a new low on the day. So hopefully we're going to get a run down into that low. We can get out and pop that one back up. We'll have a look at that later. So there you go. So that's, anyway, so that's, but this is what's under development, which is what I kind of covered yesterday as well. I started to wonder if it was a different technique. No, yeah, with basket trading, no, it's just another word for position. In stocks and institutional basket trading means something else completely. In stocks and institutions basket trading, yeah, I mean, so for example, in pension funds, you will have a basket of exposure, or in hedge funds as well, you'll have a basket of exposure, which is to do with diversification. So in a pension, you would have like 70% in FX. You'll have 10% in commodities. You might have 15% in stocks. And then you'll have 5% in ETFs or something, or bonds or something else. Or, you know, that wouldn't be that high. But so that is a basket of exposure. And it's a diversification method. So if the price of oil rockets, yeah, your FX exposure on the Canadian dollar will alter as oil alters. Yeah. So what they're doing is very much the same as we're doing here. They're looking for an opportunity to bank a profit. It's if you use diversification properly, or a basket of instruments properly, it's very difficult to lose money unless everything goes against you. So this is where you would hedge different commodities against different instruments. So if you go long on the bond market, for example, you would go short on the currency market of that bond. And one of those will at some point move faster than the other, creating a profit because they move alternately. But it's like arbitrage, if you like. And that's what they would potentially class as a basket. It's all the same stuff. It's just a load of stuff. It's what basket is, isn't it? It's a thing containing a load of stuff. This is a basket of positions, isn't it? That is my basket of positions. These are my baskets of trades on that position. So my basket of trades on positions is also a basket of positions, isn't it? That, if I closed all of my baskets out at the moment, is what I would bank. Yeah. But, institutions are obviously dealing with many threads. Yeah. There's thousands and thousands of stocks. There's hundreds of ETFs. There's all the commodities. There's everything. There's the futures market. There's the options markets. The bond markets. There's hundreds and hundreds of things you can trade. At the end of the day, you need to pick something to specialize in. It's when people come in here and talk to me about options. I ain't got a clue. Never looked at it. It's basically a chart, and you're saying it's going to go up or down within a period of time, as far as I understand. I have no clue. I don't specialize in that. I could move from trading CFDs over to trading options, but it's the same thing at the end of the day. Do I think it's going to go up or down? I don't know. No one does. So all you've got to do is find a way to extract money out of the thing that moves. You don't know whether it's moving up or down. You know it's going to move. So let's see, how far does it normally move? How long does it normally move for? So when it's moved a certain period of time, at some point between there and there, it's likely to come back, isn't it? So if we can sort of get into it there's a good chance we'll be able to get out of it at some point. When? No idea. How far? No clue. Yeah, you can use tools to measure, like we just looked at the moving average, yeah? Yeah, when you get into a trend, don't get out of the trend unless it crosses above the 9. And it will spike above it, and it will scare the crap out of you a few times along the way. But don't get out of it. If it's not coming above that 9 or above that parabolic SAR or above that mean on the Bollinger or whatever you want to use, stay in it. But the hard part is staying in it. That's the bit we can't do, isn't it? Hold on to your trades. Swiss yen, not really going anywhere. We didn't get any movement on the Swiss yen yesterday at all. Just went sideways. At the moment, it's starting to rally. But this price action here is Christmas, New Year. No idea. Long term, definitely long term down on this, because the euro rates are probably going to drop faster, which will drag the Swissy along with it. And the yen is going to increase rates. So the bias on this will be Swiss short, yen long at some point in the next 6 weeks, I reckon. But right now, you could long this up into that propulsion gap. Yeah, intraday stuff is irrelevant. We haven't had any movement. Again, this is why I used the RSI. That's why I took that trade there. Yeah, there was movement, so I'm going to trade it. If it's not moving, it's not tradable. Yeah, the only way you can make money as a trader if something is moving. If it's not moving, why get in it? Wait till it's moved and then get in it, because you know it's moving now. If it's not moving, don't get into it. So all you need is instruments that measure movement. Forget everything else that measures direction. Anything that measures direction, moving average, useless. Why? Because it's told you what direction it's gone in. I can see that. These moving averages are telling me that price is going up. Really? Candlesticks are telling me price is going up. Pointless. What's the point in that? Hey, look, it's come down below the moving average. It means it's going down. Yeah, I know, because it was above the moving averages. Now it's below it. Doesn't take a rocket science to work that out, does it? But they're good for keeping you in trends. But they're only useful for trend trading, and they're only useful for telling you what it's done. Because something is above a line or below a line has nothing to do with the next candlestick at all. It could go absolutely anywhere on the next candlestick. It's gone up 7 days in a row, short it. Why? Because it's gone up 7 days in a row. Why can't it go up 8 days in a row? Well, it can. Why short it then? What are you doing? Flipping a coin. Same way as I am. I'll go long, you go short. Oh, a trade's happened. I was watching a video, actually. One of my old mentors, Kunal Desai, put out. he's got a strategy called the rubber band snapback. Very similar, as you'll find in the bootcamp, to my elastic band theory. It's the same thing. It's mean reversion. But he was looking at a stock which has had an 8-day rally. I can't remember what stock it was. I think it was Coinbase, and it had an 8-day rally. I'm trying to find an 8-day rally. There you go. 1, 2, 3, 4, 5, 6, 7, 8. Bang. That was his rule, the 8-day snapback. And basically, I started trading that, and I was like, wow, this is fantastic when it works. When it doesn't work and you get 12 days, it's awful. That's when I suddenly started realizing the odds are the same every single day. Yeah. Just because it's gone up 8 days doesn't mean it can't go up 9. When it's gone up 9, you'll be going, oh, this has got to come down. It's gone up 9 days, then it goes up 10. You're like, 10 days on a trot? It's never done this before. It goes up 11. You go, wow, why is everyone buying Coinbase stock? They just released their earnings. Oh, does the 8-day snapback work? Sometimes. Everything is random. Everything is 50%. In that case, it actually worked for him, which is why I did a video on it, because it pulled back for 2 days, which was lovely. He made a load of money. Good for him. But everything's random. Right, I'll leave it there. That's all I've got for you today. Market's not moving. As you can see, my PLN is going absolutely nowhere. FTSE, nice position. DAX, not so much. We'll see what happens today. I'm not holding out a lot of hope on this. Looking at the FX market and the movement we've had on that, not really going anywhere, is it? So I got the feeling we might be waiting for news this afternoon. So we've got the PMIs at 3, which is half an hour after market open. So we'll be on air for that. And then obviously FOMC this evening. So we'll see if we get any movement out of the US this afternoon. But at the moment, not really doing a lot, are we? So we'll see what happens later. But there's no other ADRs to look at. There's nothing approaching ADR at the moment. There's no RSIs. So it's just a case of sitting and waiting at the moment. Everyone like before we go? Good idea, everybody. Hit the thumbs up. It helps the algorithm get me another 2 people. I really don't know how that algorithm thing works, yeah? Apparently, if you give the thumbs up, it promotes the video. I never get more than 70 to 100 people. So either we're not pushing the thumb button enough, or it doesn't work that way. I don't know. Anyway, I don't want 1,000 people in here anyway. Obviously, that would be... I'd never get out. We just had German unemployment come out, 5.9 as expected. So that's neither bullish nor bearish. Euro. Not really doing a lot, is it? So. All right. So have a good morning. I'll be back at 2:20 this afternoon for the New York session as usual. I'll be back at 7:50 tomorrow morning for Frankfurt. And we'll see how we get on. We'll have a look at the DAX this afternoon, but I'm not hopeful really on the rest of that today, but profit's a profit. And I'll be working on my other strategy, just figuring out what I want to do. And I might have that live this afternoon. So we'll see how we go. But I'm forward testing on demo anyway, so before I go live with it. So should be fun. All right. Have a good morning. I will see you guys in the next session. Have a good day.